Well, once again, hello everyone and welcome to ACAwise webinar, The Employer's Guide to the Affordable Care Act. My name is Jaracel. I am the Client Relations Manager for ACAwise, and it is my job to directly work with those handling ACA filings, whether they are HR directors, payroll accountants, or benefit brokers. And really my goal is to make sure that our clients feel well equipped to take on their ACA returns. So if you at any point in this presentation have any questions, please feel free to chat them in. They should be on the top right of your screen to be able to chat in there. But I'm able to work with clients that are doing their ACA filings because I work so closely with our in-house business analysts just to make sure that I am up to date with all the ACA compliance rules and regulations, as well as keeping up with everything that's happening in Washington, so that of course I can relay that to our clients so that they may remain well informed and of course compliant. And if you'd like to learn a little bit more about our solution, ACAwise, please feel free to give me a call or send me an email. I'd be happy to schedule a quick demo or discuss our services and our volume-based pricing following the webinar, and I'll have my contact information at the end of the webinar there as well.
Hi, I'm so sorry that took so long.
Okay, so let's get started. So today we'll break down the C series of the ACA forms. So now there is an A and B and of course a C series, but today we're just going to focus solely on the C series. And so as a note, ACAwise does assist with B series filing. So feel free again to chat in your contact information. I'd be happy to give you a quick call following the webinar if you're in need of any assistance regarding 1095B filings and 1094B filings. But as for the C series, there are two parts to it. The first is the 1094C, which is titled The Transmittal of the Employer-Provided Health Insurance Offer and Coverage Information Returns, which is quite the mouthful. But it is basically just a transmittal form that is to be filed for each EIN in conjunction with an employer's 1095Cs. And the 1095Cs are forms that must be filed by an ALE member to each of its full-time employees or full-time equivalent employees. So this form and this form is titled the Employer-Provided Health Insurance Offer and Coverage for all 12 months of the calendar year, and that's really the goal behind this form, is to be able to track that on a month-to-month basis and for the IRS to really keep tabs on that on a month-to-month basis. So that was really a broad definition of both forms, but now I want to go ahead and take apart these forms piece by piece, starting with part 1 of the 1094C. This section is pretty straightforward. The IRS is really just looking for the employer basic details for each ALE. So at the risk of sounding redundant, I just want to make sure that we're all here on the same page. An ALE is a single employer or a group of employers treated as an aggregated ALE group that have employed an average of at least 50 full-time employees, including their full-time equivalent employees for a calendar year. So if you fall under that, if your organization falls under that definition, then you are required to file this 1094 and 1095C form. So aside from the employer basic details, part 1 also goes into account and asks employers to provide the name of the designated government entity, of course only when applicable. So this only applies to those who are part of a larger government entity. So that means municipalities, schools, things like that. If you are not a part of a government unit that is also an ALE member, then you can go ahead and skip boxes 9 through 16. So that's comforting for non-government entities there. You can also go ahead and ignore line 17, but then line 18 and 19 must be filled out by every applicable large employer. This section really asks how many forms are being transmitted with this specific return, and if this 1094C is the authoritative transmittal for this ALE member. And an ALE can choose to file or transmit multiple 1094s along with multiple batches, if you will, of 1095. But one of those batches or one of those transmissions must be labeled as the authoritative transmittal according to the IRS. So going on into part two, part two's questions are a little bit more involved. You'll see in line 20 is asking for the total number of forms being transmitted on behalf of this ALE. So on the previous line, you told the IRS how many forms you were sending just with this one transmission, but this line 20 is asking, well, how many forms are you planning on filing total? So the IRS has an idea of what to expect. Then we have line 21, which asks if the ALE is part of a larger aggregate group. And again, your answer to this question quite heavily affects how you fill out the rest of the 1094-C. So please make sure to label it accordingly. If the answer is no, then you're in luck. You don't have to fill out part 4 of the 1094-C. But if you do, keep in mind that has a trickle effect to the rest of the 1094-C. And then we have the last line in the section, which is line 22. And it's asking employers to select what eligibility relief you qualify for. So if you have already been removed, there are certain requirements that have already been removed, such as your 4980H transition relief. There is no more transition relief for this tax year, so you can't choose that as one of the options. Why? It's reserved. But you still have the option to select a qualifying offer method and a 98% offer method. And really, the idea behind the qualifying offer method is that it applies to employers who offer a plan that meets the minimum value requirements at a very low rate. So the government is essentially offering a grace for employers who apply so that they have to report less information. And similarly, the 98% offer method provides greater reporting relief, sort of as a thank you to employers offering a bronze level or higher plan at a quote-unquote affordable rate to at least 98% of the company's full-time employees. So you can select those, and that kind of lets the IRS know even on your transmission page just exactly how much information is expected on the forms to come. So now we'll have part 3 of the 1094-C, and this section can be a little bit laborious, especially if the information requested is not being tracked throughout the year. So if you don't have a year-round compliance feature, or if you're just getting this all done at once, it can be a little bit tedious, but let's go ahead and dive in here. Column A is asking employers to indicate whether their offer of coverage was met minimal essential coverage. So if it fell under that category, and if an ALE, if an ALE does offer MEC coverage or minimal essential coverage to at least 95% of its full-time employees and their dependents, then they can go ahead and click or check X in the boxes that are listed there. So I'll go back and show you. So you'll be able to check yes on here, either for all 12 months or for any of the applicable months. Now, it should be noted that an employee is not an employee in limited non-assessment period. So those that are in their waiting period are not counted in determining whether the minimal essential coverage was offered to at least 95% of an ALE's full-time employees and their dependents. So they're not considered in that number when determining minimal essential coverage. Now, continuing on with Part B, we'll have column B, and that's basically just asking employers for a full-time employee count. So while on column C is just asking you for a full-time employee count, so column B is asking you for a full-time employee count, and column C is asking you for the total employee count. That includes full-time employees, non-full-time employees, and any employees that might be in that limited assessment period, so they might be in that waiting period. But the trickiest part of all that is, of course, that it needs to be counted on a month-to-month basis. So I'll go back again just one more time for reference. Column B is asking for all full-time employees on a month-to-month basis, and then column C is asking for all employees. So there is a little bit of leeway here. It can be an estimation. Obviously, it shouldn't be, and the way to ensure full compliance is to be able to track that either year-round or have some sort of report, but the IRS does allow for an estimation, if you will. So lastly, we'll go ahead and talk about, we'll talk about column D, which is the aggregated group indicator. And this section is just asking those who selected line 21 that they were part of an aggregate group now need to indicate what months during the calendar year were they members of those aggregate groups. So again, at the risk of being redundant, you'll see that right here on the right-hand side, column D, where you can select what month or all months where you were considered part of a larger aggregate group. So we're finally now on the fourth and final section of the 1094C, and this section only applies to, again, those who have selected yes on line 21. Therefore, if an ALE is part of a larger aggregate group, then they do need to provide the name and EIN of up to 30 of the other aggregate group members. They don't have to include their own business, of course, on this list, but they do have to include the other members of the aggregate group. And if for some reason you are part of an aggregate group that is larger than 30 members, you are instructed by the IRS to enter the 30 with the highest monthly average number of full-time employees. So that's what's being listed here. Okay, so now you have all the necessary information that you need for your 1094Cs. We can now go ahead and begin to address the 1095Cs. Again, any questions, please feel free to chat them in, but we'll go ahead and dive into the 1095Cs. So the 1095C starts off similarly to the 1094C. Part 1 is simply asking for both the employee and the employer's basic details. So this will include, of course, name, name of employee, social security, and address. And then for the employer, it would include the name of the employer, the EIN associated, and the address along with that as well. Then we have part 2, which is lines 14 through 16, and this is definitely hands down the hardest portion of the forms to navigate, basically because the IRS has developed their own coding system. But line 14 describes the offer of coverage. So a code is mandatory for this line no matter what the employee status is, as long as they're a full-time employee. A code is mandatory for this line regardless of the circumstance. And it just describes the offer of coverage that was made to each employee. But don't worry, we're going to go ahead and discuss a few of those most common codes in just a few slides. We'll come back to that. And then we have line 15, which of course is the employee required contribution. And so here you must add an actual dollar amount for the lowest cost premium offered to that employee. And I did want to note before we moved on from the line 15, even if the employee was actually, of course, enrolled in a higher cost of coverage option or opted out, whether they had a plan that included dependents or perhaps had a higher cost, or even if they really opted out of coverage altogether, line 15 should reflect the premium of the lowest cost option offered. So that's all the IRS is really looking for, making sure that that lowest cost option was what they deemed to be affordable. And then also getting a little bit more into coding, line 15 only needs to be filled out if you have coded 1B, 1C, 1D, or 1E on line 14. So that's something to keep in mind. But lastly, we have line 16, and this line also does not necessarily need to be filled in, but in most cases it will, and this is considered the safe harbor code, and it needs to be entered to reflect the safe harbor situation that applies to your employee. So whether an employee was not an employee for that month, or perhaps they weren't full-time or were not enrolled, all of this needs to be identified right here on this line 16. But of course, we'll get into why and a little bit more of those common codes. So the last portion of the 1095C is the Part 3, and it's considered the covered individuals. And this section only applies to those who are self-insured or self-funded. So if you are fully insured, or self-insured, it does not apply to you. But if you are, I'm sorry, I just want to make sure I said that correctly. If you are fully insured, it does not apply to you. But if you're self-insured, it does. So if you are self-insured, then you will need to add in those basic details of each individual that is covered by this employee's coverage. So that means that you'll have to add in that name, the Social Security and or the date of birth, and then the month that the individual received coverage. Okay. And I see that we have some questions coming in. I will go ahead and answer some of those questions at the end there. But feel free to keep them coming. Okay, so now we'll talk about the common codes. So we're not officially done with the 1095Cs quite yet, so we'll go ahead and go over those. Let's start off with the codes on line 14. And so these codes are really meant to answer the question, was the individual offered coverage? And if they were, what type of coverage was offered, and which month were they offered this coverage? So we'll go ahead and go into that a little bit and define them. And these are just a few of the major ones that in my experience in the last few years that we have been filing that we've come across and have definitely been the most prominent ones. We'll start off with code 1A, which is considered the qualifying offer. This means that the offer of coverage that you have given to your employees meets that minimum essential coverage as well as that minimum value, and is actually equal to or less than the mainland federal poverty line. And so if that's the case, you're considered a qualifying offer, so you're actually allowed to have more blanks in your form and have to put in less information. Then we have the 1B, which shows that you did shows the IRS that you did offer minimal essential coverage, providing minimum value, but you only offered it to the employee, as opposed to 1A, you offered it not only to the employee but to its spouse and dependents as well. So those are two of the major ones that we'll see. And with 1B, unlike 1A, you will need to fill out line 15 and make sure that you put that self-only premium amount. That means the premium amount for the employee only, the lowest cost premium for the employee only. Then we have 1E, which is the minimal essential coverage, providing minimum value offered to employees for at least minimal essential coverage offered to dependents and spouse. So these are, after 1A, these are all close but no cigar, essentially, to the 1A. So then you kind of need to prove it a little step further by adding in a line 15 of what the lowest cost premium for employee only is. Then we have 1G, which is offer of coverage to an employee who was not full-time for any month of the calendar year, and who is enrolled in self-insured coverage for one or more of those months during the calendar year. So this is huge, a huge code for COBRA members and retirees, and this is the coding that they'll often fall into depending on their status there, but that's primarily what the code 1G is used for. And then 1H, of course, is no offer of coverage at all. So that means if there was no offer of coverage, then obviously you can leave line 15 blank. And then we can move on to, again, there's little to explain for line 15 because it's just so dependent on what you put on for line 14. So we're going to go ahead and hop over to line 16 and talk a little bit about those safe harbor codes and the other relief for employers. So basically this line 16, is used to answer a few of these questions. So was the individual employed, and if so, was he or she full-time or part-time? Was the employee enrolled in coverage at all? Was the employer eligible for transition relief as an employer with a non-calendar year plan or as a contributor to a union health plan? And the only reason why I put that in is because While everything I mentioned is specific to tax year 2017, if you have any catching up to do, perhaps if you didn't know that you needed to file for 15 or 16, we also offer that service through ACAwise, and I did want to let you know that you can still go ahead and submit on and identify transition relief for those past years. It's just not applicable for 2017. And then the final question would be, was coverage affordable? And if so, based on what IRS safe harbor? So whether it was the W-2s or federal poverty line or so forth. And then we'll get into a couple of the common codes here. The first being 2A, employee was not employed during this month. So that one's pretty straightforward. You do not, the only thing I wanted to make sure is that you don't use code 2A for a month during an employee termination month. So even if they were terminated and insurance coverage ended on termination date, you still do not put 2A does not qualify. They are still considered to have worked for that month. So that's sort of a gray area, one of many gray areas when it comes to these codings that I wanted you guys to be aware of. Then we have 2B, which is employee is not full-time. So this is really pertinent to if someone chose not to enroll and also was not full-time, if the employee did not enroll in coverage but terminated their employment before the end of the month, then that's when you would go ahead and use 2B for that month. And then obviously one of the most common ones is employee enrolled in coverage offered. So it is used to indicate, again, the employee did sign up and did enroll in coverage for any month within that calendar year. And one thing I wanted to bring up about the code 2C is that as you see the larger list, if you're preparing your own forms, there are a lot of ones that kind of fall into 2C. Yes, they were enrolled in coverage, but, and there are codes that kind of go along with that, but 2C trumps all of those codes. So when in doubt, if you feel like your employee kind of falls into multiple categories in this section, 2C trumps all of that. So that's just a little tidbit of information. And then lastly, regarding 2C, you do not enter code 2C for any month during which a terminated employee is enrolled in COBRA. Instead, you should be using code 2A for this situation. And more information on that if you'd like. Again, you'll have my contact information in just a little bit and reach out. And then we have 2D, which is are those employees that are in that waiting period. So that's how you know that they were full-time but not eligible quite yet. Wonderful. So hopefully you have a better handle on some of your upcoming filings. And just before we close, I wanted to go over a little bit of what those ACA deadlines are and any potential penalties that you can incur. So we'll start off with the deadline. We'll start off with the slightly less stressful portion of it. But that will be the first deadline is March 2nd, and that is the distribution deadline. Then, well, I guess it's not your first deadline. Your first deadline is if you are deciding to paper file, you'll go ahead and file that on February 28th. I guess I'm a little biased as an e-file provider. Our first deadline is March 2nd, and that's just when you have to have those 1095-Cs distributed to your employees. And then March 31st, better known as April 2nd, will be the IRS e-filing deadline. So it's typically on March 31st is that e-filing deadline, but it falls on a weekend this year, so the IRS has graciously pushed that over to the next business day, which is April 2nd there. And then quickly, I do want to go over some of those ominous penalties that kind of keep looming over us and over the news. And again, I wanted to reiterate that the values that I'll be discussing are updated to reflect tax year 2017 penalty guidelines. So I'll go ahead and start with and quickly run through the no offer penalty. So this penalty states that if an ALE does not offer any form of coverage, to at least 95% of their full-time employees, then they are subject to an annual $2,260 penalty per employee. So this penalty is assessed on a monthly basis, so it would more practically look like $188.33 per month per employee. So the next one is the unaffordability penalty, which means if coverage is offered but is deemed unaffordable based on the ACA standards that we've previously discussed, and then the employer is subject to an annual penalty of $3,390 per employee. Or again, this one's also broken down on a month-to-month basis, it's assessed monthly, so it would be $282.50 a month per employee. And so the last two penalties have to do with filing. So failure to paper file on time or failure to provide accurate filing information can lead to $260 and $520 fine per form. But these penalties are capped at $6 million, so maybe that's comforting to some. But if you fail to electronically file, the rules are a little bit more hard and fast. There's less leeway with that, so businesses are actually subject to a fixed $260 fine per form. So as you can see, the penalties are no joke. The IRS has granted a little bit of grace. We do have the good faith effort on our hands, and we also have a little bit of leeway when it comes to TIN errors. And we're actually going to work on a webinar that goes a little bit more into that. But nevertheless, the IRS has begun distributing penalties for tax year 2015, so it doesn't seem as of yet that that's something that's going to be lifted anytime soon. Okay, so now I'll go ahead and check in, if you just give me a couple moments while I check in on some of the questions that have trickled in during the presentation. And I know this is a lot of information, and trust me, I know it's not easy to retain, which is why, again, if you have any questions, I've gone over anything I've gone over, feel free to call me or shoot me an email to my direct email there. Allow me 1 second as I look at the incoming questions. Okay, so it looks like we have one question from Steve. On lines 14 and 16, one of the issues that we've struggled with is what should be reported for partial months in each line. Can you elaborate? Sure. So as I mentioned before, if a employee is terminated at any point in that month, then they are considered to have coverage for that month and have considered to be employed on that month. So it really depends on what your coverage cutoff date is. If your coverage cutoff date, which is probably the most common one, is the end of the month, then they are considered to have been enrolled in coverage. So that would be 2C for line 16 for that entire month. And then it's specific. There's a lot of gray here. So let's say the scenario was that they were in their waiting period, or they were hired halfway through the year or halfway through the month. They're still considered just to have been hired full time. So for line 14, they would be hired. So it would not be 1H in that regard, or it wouldn't even be 2B there. It would again be whether they were enrolled in coverage, and if they weren't enrolled in coverage, were they in their waiting period? What was the answer for that? What rationale were they not? But yes, if they were hired for any day over that was full time, then they are considered to be hired for that month, according to the IRS. So if you'd like, again, shoot me an email or give me a call, and I can ask you a few more questions about your specific case, and I can answer that for you. And then that seems to be the biggest question we have right now. Again, there's a lot of gray with these codes, which is why we decided to have a webinar like this, and why we want to continue to have that conversation, and why, frankly, we have the services that we do where we can take care of the coding and the form generation for you, or sort of walk you through it if you're wanting to do it on your own. Our services do extend to those lengths So if this does seem like a bit too much too soon with the deadlines coming in a few weeks, please do allow us to help. We'd be happy to facilitate your ACA filing needs. Really, however, we'd be happy to in any way that you need. So whether that's helping you with the codes or walking you through generating your own codes and making sure that those things are distributed and transmitted in a timely manner. Alrighty, well, thank you so much. If you have any other questions, again, I see that there's more questions trickling in. I'm going to go ahead and send you an email regarding that information. But thank you so much, and until next time.